Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we will be solving November 2019 University question paper under the subject Wealth Management. Again, a very important video for all the TYBMS SEM5 students. So, we will be solving the entire paper in this video. So, let us start one by one what questions were asked and how they were supposed to be solved. The first question, Mr. Mohanji furnishes the following detail for the year ended. Short-term capital gain income from business, loss of speculative business, long-term capital gain, long-term capital loss, income from salary, loss from house property, income from owning and maintaining race horses, income from house property, carry forward loss of electronics, loss from owning the maintaining the horse race. All these informations were given, and they're asking you to compute the gross total income of Mohanji. Also, state the eligible carry forward losses for the assessment year 1920. Okay, now let us see how to solve this. First, we'll start with income from salary, which was 8 lakhs given. Next comes income from house property. So there are two house property. One is 2,40,000 and one is 180. Okay, and then there is a loss of income from loss of property A, 2,60,000. So there are three house property A, B, C. A is a loss negative 280, negative 260, and there are two positive 240 and 1,80,000. So we get a net of positive value. So 1,60,000 is a positive income from house property. Income from salary is single value, so we wrote it as 8 lakh in the outer column. Okay, now this is very important. Short-term capital gain 2,40,000, that is from under income from capital gain. So we directly write it in the outer column. Then there is long-term capital gain of 1,20,000 and long-term capital loss of 2 lakhs. So 1 lakh minus 2 lakhs is negative 80,000. Okay, that negative 80,000 will become nothing but the short-term capital loss carry forward. Okay, so 2,40,000 is the only value from income from capital gain. Then comes this, they had given us income from owning a horse, maintaining the race horse 1 lakh, and then there was an adjustment to it. The loss from activities of owning and maintaining horses pertaining to the year 1617 is 3 lakhs. So income was 1 lakh, set off was 3 lakhs, so carry forward will become 2 lakhs because that's a loss. Next, we have income from business of electronic 4 lakhs, and there is a adjustment carry forward loss for business is 1 lakh 40. So 4 lakh minus 1 lakh 40, the value comes to 2 lakh 60,000. Okay. Now there is one more thing, loss from speculative business, and since there is no other speculative business ka detail given, that loss will be carry forward. So loss from business speculative carry forward 2,40,000. Okay, that's it. So we add up all the incomes what we have now, 8 lakhs plus 1 lakh 60 plus 2 lakh 40 plus 2 lakh 60. We get a final value of 14 lakh 60,000. That is nothing but the total income. Okay. So this is how you all had to solve question number 2P from the question paper of November 2019. That was the first sum. Now let us check what was the next second sum which was asked in the question paper. I hope everyone have understood this. The second question reads out as the balance sheet is given to us and they're asking us to calculate four ratios. First is current ratio. So now let us see how to start. Current ratio is nothing but current asset upon current liability. Now current assets mein what are the things that we have? We have stock, we have debtors, we have cash balance, we have short term investment. Profit and loss, share issue, preliminary, these are not my current assets. Okay, so those are the only four things. Current liability may we have creditors, bank overdraft, provision for tax, and proposed dividend. We add up and we get the total. Our total comes to 24 lakh 82,000 and 6 lakh 50,000. When we divide, we get the value as 3.82 is to 1. Okay, the next ratio that they had asked was acid test ratio. Now, acid test is nothing but quick current asset upon quick current liability. So, under quick current asset and quick current liability, under quick current asset, we have excluding stock. So, we have debtors, we have cash balance, and we have short term investment. When you add up, we get the value of 16 lakh 32,000. For quick current liability, we have to ignore overdraft. So, we have creditors, we have provision for tax and dividend, which comes to 4 lakh 45,000. When we divide, we get the value as 3.67 is to 1. The third, debt equity ratio is debt upon equity. So debt given is debentures, which is 10 lakh, equity is 25 lakhs, plus general reserve plus security premium. Okay, less all our losses which are given, or fictitious assets of the losses. So the net amount comes to 3 lakh 80, 38 lakhs 32,000. When we divide it, we get the value as 0.26 is to 1. Okay, the next ratio which they ask us is capital gearing ratio. Now that capital gearing, the formula is debt plus preference share upon equity fund. The debt is again given. Now debt plus preference share it is, okay. So debt is 10 lakhs and preference is 8 lakhs. So total comes to 18 lakhs upon again equity fund, only equity fund. So that comes to 30 lakh to the 30 lakh 32,000. When you divide it, we get the final value as 0.59 is to 1. Okay. So these were the four ratios that they are asked in this particular paper. Current ratio, asset test ratio, debt equity ratio, and capital gearing ratio. Okay. So this was the second question which was asked in this particular paper. Now we jump to the next one. Mr. Shahrukh purchased a house property for 20 lakhs on 1st September 1995. Again, that it is before 2001. This value will not come anywhere. He incurred 7 lakhs in financial year 97-98. Now, improvement before 2001 has to be ignored. We ignore the 7 lakhs and 2 lakh 50,000 in the year 2006-7. So that is the improvement value in the year 2006 and 7. The fair market value, that will be our cost of acquisition, 25 lakh 50,000. He sold the house for 95 lakhs and paid brokerage of 85,000, and all the CIs are given to us. And he also purchased another house for 30 lakhs. Okay, so let us check how to calculate the capital gains. Sale consideration given in the question is 95 lakhs minus brokerage came to 94 lakh 15,000. Less cost of acquisition is total cost of acquisition, that was 25 lakh 50,000, into CI of the previous year, which is 280, upon the CI of year of acquisition, which is 100. So when you multiply, divide, you get the value as 71 lakh 40,000. Next is index cost of improvement. Now there were two improvement, but we cannot take the 7 lakh before, because it was before 2001. So it's only 2 lakh 50,000 upon 2 lakh 8 upon 280 into the year of improvement. Improvement was done in the year 2006-7, which is 122. So 2 lakh 50,000 into 280 upon 122, we get the value as 57,3770. We subtract it, we get the long term capital gain as 17 lakh 1230. Less new purchase or new investment which was made, which was 30 lakhs ka, so we did 30 lakhs. So we get a long term capital loss of 12 lakh 98,770. Okay, so this was question number 3Q in the question paper. I hope everyone got that. We jump to the next one. There are only two more questions pending. So question number 4P, may compute the tax liability of and the taxable income and tax liability of Naseem, who is an handicap assessee for the assessment year 1920. Income from business, interest on saving, post saving account, income from house property, income from salary, winning from lotteries, interest on FD, interest on NSC, contribution to pension fund. All these things are given to us. Let us see how to solve one by one. First, income from business is 3 lakh 60,000 given, noted it. Interest on post, that will come in other source. Income from house property given 48,000. Income from salary given 2 lakh 40,000. So we taken these three. Now comes income from other source, under which we have post saving account, which is 55,500. Winning from lottery is there 30,000. Interest on FD is there, and interest on saving certificate NSC is there. We add up all the income from other source. The value comes to 50,000. 50,500. Okay, so 30 plus 5 is 35, 39, 49,500. Just check if I have made any calculation errors here. 5,500 plus 10,000. So on the calculation, 5,500 plus 10,000 plus 4,000. being interest on NSE, interest on NSE is 5,000. So 5,500 plus 10,000 plus 5,000 plus 30,000 comes to 50,500. Yes. So when you total up, we get 3 lakh 60 plus 48 plus 2 lakh 40 plus 5,500. The gross total income comes to 6 lakhs 98,500 less deductions. Now deduction may we have NSC which was under ATC 5,000. Then there is contribution to pension fund under 80 triple C 54,000. The person is handicapped, so 75,000. Still other information is not given. And saving account ka bank ka interest is there 5,500. So interest on saving bank 5,500. When you add up, we get the total deduction of 1,39,500. So 6,98,500 minus 1,39,500. We get the net taxable income as 5,59,000. Okay. So 5,59,000 is our net taxable income. Now from that we will deduct TDS of 30,000. Okay, TDS is nothing but basically this is not TDS. This is actually winning from lottery. Winning from lottery, since we have taken it here, but winning from lottery will not be a part of our net taxable liability because for that, see the sum gets over usually here. But since we are asked to find tax liability, so we need to get different category ka tax separately. Okay, so winning from lotteries will be a separate thing altogether. We like winning from lottery 30,000 we are subtracting. So my net tax liability is only 5,29,000 now. And lottery will be charged separately, tax over it. Okay, now let us see how to find that. Tax slab, now since nothing is mentioned, we assume we are less than 60 years. So 0.25 pay no tax, so 2,50,000 pay no tax. Next 2,50,000 pay 5%, so we take that as 5%. So 5 lakh, 2 lakh 5, 250 into 5%, 1 lakh, 12,500. So 2.5 plus 2.5, 5 lakhs is done. So remaining 29,000 come in the third slab of 20%, which comes to 5,800. We add up, we get it as 18,300. Lottery, which we are removed separately, on that now we'll have to take flat 30%. Anything based on winning or game shows are all 30% tax. So 30,000 to 30% is 9,000. We add up, we get our total gross tax liability value as 27,300. On that, we add a 4% cess, which is 1,092. When you add up, we get a final total tax liability of 28,392. Okay, so this is how you'll have to solve the sum based on taxable calculation of taxable income and tax liability. Okay, chalo. I hope everyone have understood this. This was the fourth sum in that question paper. One last sum. Mr. Nitin is an assessee whose income is estimated to be 22 lakhs during the previous year. Now, this income, okay, and they're asking us to find the advanced tax. So some gets divided in two parts. First, we need to find the tax liability. Since his income is 22 lakh, 0.25 pay he doesn't need to pay tax. Next 2.5 pay 5%, which comes to 12,500. Next 5 lakhs pay 20%, which comes to 1 lakh. So 10 lakhs are done. So another 12 lakhs are remaining. So 12 into 30%, 3 lakh 60. Total comes to 22 lakh. Taxable value is 4 lakh 72,500 plus 4% cess. Total value comes to 4 lakh 91,500. Now that is the tax liability. Now advance tax के लिए 4 dates before 15 June, before 15 September, before 15 December and 15 March. The rates are 15, 45, 75 and 100. Okay, so 4,91,500 into 15% into 45% into 75% into 100%. Whatever value you get, okay, those are all cumulative value, and then from cumulative we subtract and we will get our individual amounts, which comes to 73,710, 1,47,420, 1,47,420, and lastly 1,22,850. When we add up, we get the total value as 4,91,500. That is nothing but the total tax liability. Okay, so the due dates and the amount to be paid on the due dates have been found, and the total tax liability is also been found. So this was the last one which was there in the particular question paper. Okay, so I hope everyone have understood all the sums from this particular question paper. With that, we will be ending this video here. Thank you.